Hello everyone, welcome to the Mastering Ichimoku Kinko Hyo course. I'm very pleased that you are here today to explore one of the most powerful Japanese technical analysis tools together. Ichimoku Kinko Hyo is a comprehensive and complete system for technical analysis developed in the 1930s, allowing us to analyze the market more comprehensively. In this course, which is designed in 3 sessions, our goal is to familiarize you with all the components of this system and teach you how to use them and to develop the trading strategies based on these very powerful components of Ichimoku Kinko Hyo. And this course will help you use this powerful tool in your analysis and make better trading decisions. So join me as we get to know the system step by step and leverage it in our trades. Okay, we're going to talk about in this session, we're going to talk about the components of the Ichimoku Kinko Hyo, and in the next session next week, we're going to talk about how to analyze the live market using Ichimoku Kinko Hyo, because it's really necessary to for all of us to get familiar first with the component, with the foundation and the interpretation of these components first, and then we need to jump on before we jump on analyzing the market based on this tool. And in our on the let's say final session, the third session, we're gonna explore some common powerful trading strategies using Ichimoku Kinko Hyo. Okay, now that you're familiar with the overall course, let's take a look at the history of Ichimoku Kinko Hyo for the beginning. And this system was developed, let's say, by Guichi Hosoda, a Japanese journalist in the 1930s. And Hosoda aimed to create a comprehensive tool that could simplify and enhance market technical analysis. Ichimoku Kinko Hyo translates to balance at a glance. This is the translation from the Japanese to English. And this name was chosen because the system allows analysts to quickly gather important information from a single glance at the chart, including trends, support and resistance levels, and of course, spotting buy and sell signals. It was to mention that Goichi Osada spent many years researching and developing the system. He finally published his results in 1968. Initially, this tool was designed to analyze the Japanese rice markets. And over the time, due to its high accuracy and predictive capabilities, Ichimoku gained significant popularity among Japanese analysts and become one of the aim tools for technical analysis in Japan. By the way, in the following decades, with the expansion of trade and international information exchange, Ichimoku Kinko Hyo gradually entered Western technical analysis, and Western analysts discovered that this could be used by analyzing markets, including all markets, including the stocks, the forex, and commodities. And one of the reasons that Ichimoku's global fame is its strong predictive capabilities, which allow analysts to easily identify future support and resistance areas. A particularly notable feature of Ichimoku is that is the Ichimoku cloud, which we're going to talk about it in more detail today. This component helps analysts easily identify future support and resistance zones and also understand the momentum of the current or prior market trend. Therefore, the history and meaning of Ichimoku Kinko Hyo illustrates why this tool has maintained its popularity for several decades and continues to be widely used by analysts and traders worldwide. But Let's now that we've explored the rich history and background of Ichimoku Kinko Hyo, let's dive into the heart of the powerful analytical tool by understanding its key components. Each of these components that we're gonna get through them plays a unique role in providing comprehensive view of market trends. Let's start with the first component known as Tenkan-sen or conversion line. If you see, this is the almost red line that you see here. This is the Tenkan-sen. Okay, now you see my laser point here. And this is this red line, almost red line, is Tenkan-sen. Think of Tenkan-sen as the short-term change line. It's calculated by averaging the highest and lowest prices over the past 9 periods, or past 9 candlesticks. Unlike the simple moving average that only considers closing prices, Tenkan-sen captures the full range of price movements, giving us a more dynamic view of market volatility. What is fascinating about Tenkan-sen is its ability to provide early signals for trend changes. It's like the market's pulse, offering quick insights for entering and exit points. Many analysts overlook its potential beyond just short-term trends, but it's truly a gem for identifying rapid market shifts. And you will see how we're going to use it in our next few slides. And then we have a Kijun-sen, or the baseline, this blue line that you see here. Kijun-sen, or the baseline, looks at a slightly longer period, averaging the highest and lowest prices over the past 26 periods. And similar to Tenkan-sen, Kijun-sen provides a more robust picture of market volatility using high and low price ranges. And this is the advantages that these lines have compared to moving averages, simple moving averages. One of the less discussed but critical aspects of Kijun-sen is its role in confirming trends. When the price simply stays above Kijun-sen, it indicates a strong upward trend. It's like having a reliable friend who validates your observations, adding an extra layer of confidence to your analysis. And the next component is Senkou Span A. Yeah, Senkou Span A is the line here, if you can see it. Yeah, this is, and what is this? This is a leading span A. This is a translation to English from Japanese. It combines the averages of Tenkan-sen and Kijun-sen, then projects this average 26 periods into the future. So you see, all of the components of Ichimoku Kinko Hyo are kind of moving averages. This is the usually fabricated price noises in different time frames in different periods and different shifted periods. Okay, so the Senkou Span A, again known as a leading span A, combines the averages of Tenkan-sen and Kijun-sen. So we have the Tenkan-sen here, we have the Kijun-sen here, and if we calculate the average of these two lines and projected a 26 period or shifted 26 period forward, we get the value of what we call Senkou Span or leading span A. Okay, this forward-looking component is a part of the Ichimoku cloud and plays a crucial role in forecasting future support and resistance levels. Imagine having a tool that not only tells you where you stand, but also gives you a glimpse into potential future obstacles and opportunities that you can reach. Okay, so far so good. If you have any question, please just write it down through the chat box that you have. Let's get through the fourth component, which is Senkou Span B. Senkou Span B, the name is very similar to leading span A, and we call it leading span B, but it's calculated by averaging the highest and lowest prices over the past 52 periods and projecting it 26 periods ahead. So what is this? The Tenkan-sen is the 9-period average of high and low, the highest and lowest price in the past 9 period of time. And the Kijun-sen was the 26th average. And now we have the Senkou Span B, which is a 52 periods average, which is projected 26 periods ahead. And you can see here, this is the Senkou Span B. This one is often stronger and more stable than Senkou Span A and Tenkan-sen and Kijun-sen because it's longer compared to other components, baseline and conversion line, and also it's not the average of the average, it's the straight calculated based on the price. So it's a stronger than Senkou Span A. Okay, so this line is often stronger and more stable than Senkou Span A, Tenkan-sen, and Kijun-sen, offering even more robust support on resistance levels. The distance and relationship between Senkou Span A and B creates something that we call it cloud. This thickness reveals the strength of the trend. Okay, a thicker cloud suggests a strong trend, while a thinner cloud indicates potential weakness. We get to the cloud, we know it as a Kumo. The Kumo, or Ichimoku cloud, is the space between Senkou Span A and Senkou Span B, which are the moving average, the average of Tenkan-sen and Kijun-sen, and the 52-period averages of the highest and lowest price. So the space between these two is known as Kumo, or cloud. It's a visual representation of support and resistance zone. The shape and thickness of the clouds provide insights into market strength. A thick cloud typically signals a strong support or resistance, whereas a thin cloud might suggest that the trend is losing momentum. Additionally, changes in the cloud's color can signal potential trend reversals, acting like an early weather warning system for the market. But it's not the all. Last but not least, we have Chikou Span that we call it lagging line. The Chikou Span of lagging line takes today's closing price and shifts it back 26 periods on the chart. And this it appears like this green line as you see on the chart. Okay, this component is incredibly useful for confirming trends. And if the Chikou Span is above the price, it supports a bullish trend, and if it's below, it confirms a bearish trend. It's like a review mirror, okay? Helping you see how the current price action relates to past movements, which can highlight strong support and resistance levels. This is how we use it. And you will see there are some advanced usage of all of these components and put them all together in our future slides here. However, by understanding each of these components and how they interact, you can harness the full power of Ichimoku Kinko Hyo and analyze the market with greater precision. There are coming, let's say, slides will dive deeper into each component, exploring their applications and how to integrate them into your trading strategy effectively. But here, let's take a look at how we can apply it on our charts. Okay, okay, I have a comment from one of our attendees that they have an audio problem. Please let me know if you have any problem with the audio, if it's not clear to you, uh, uh, or everything is fine at your end. Please let me know through the chat, so my colleagues will be able to maybe address the issue if there is something coming up from our side. Okay, all set, all good? Very well. Okay. It seems the audio is no problem from our side, and I appreciate your my dear friend. If you just change your personal setting on your desktop, or if you're watching through the mobile phone, please make sure that you have your uh, headphone or something plugged in. So uh, it's going to improve the quality of the sound for you. Okay. Let's get through the uh, let's say setting up Ichimoku Kinko Hyo on our trading platform. First, open your preferred trading platform, say MetaTrader 4, 5, or the, let's say even Trading View or C-Trader. You can find Ichimoku Kinko Hyo on all of these platforms. Then choose a chart of the financial instrument you want to analyze it, and locate the indicator menu. Let me just also bring up my platform here. You see I have an MT4, and let me just delete it. Okay, so locate the indicators menu on your platform. It can be under the insert or indicators tab if you have the also here indicators tab on MT4 and MT5, depending on the platform you're using. And then you can select the Ichimoku Kinko Hyo from the list here. But if you see, like me, you need to go through the trend indicator, and then here is the Ichimoku Kinko Hyo, and this window appears here. Ichimoku Kinko Hyo is typically set with default parameters of 9, the parameters of 9, 26, and 52 periods, which are optimized for most market conditions. This setting are Tenkan-sen, the first one, as we discussed. The second one is Kijun-sen, 26 periods, and then the Senkou Span B with 52 periods length. Okay, so these are, and you can see the names. And ensure there's a default setting on a price unless you have a specific reason to adjust them based on your trading strategy. Uh, for better visibility, you may want to customize the colors and thickness of the Ichimoku lines and clouds. So this can usually be done through the indicator setting menu or here when you want to apply this. Always you can apply on your chart, and then you can just find one of the lines and double click on it, and then you can get access to this window to adjust the color and everything for better visibility at your choice. So choose constructing colors for each component to distinguish them easily. For example, see here I have a Tenkan-sen in red, Kijun-sen in blue, Chikou Span lime, up Kumo is green, but I turn it, I changed it to dots points to make a difference between these lines of Kumo lines actually, and the let's say direct averages like Tenkan-sen and Kijun-sen, and then I have the down Kumo in the orange red, which I wanted to be red but different than the Tenkan-sen, or to let's say blend them up. So, and that's it. You can change the thickness of them here, and this is very easy, you see. And now we have the Ichimoku Kinko Hyo applied on our chart, which is the EUR CHF on a weekly chart. So You can adjust also the thickness if needed to ensure they are clearly visible against your chart background. Uh, Let me make sure everyone can see my MetaTrader 4. Okay, it's cool. And as we said, first line, you see here the Tenkan-sen. If you just uh, keep your pointer on it, you can see the Tenkan-sen value provides short-term trend information. Quick moves above or below this line can signal potential entries or exits. And then we have this blue line, which is a Kijun-sen, acts as a confirmation of trends. Prices above Kijun-sen suggest an upward trend like this, and below Kijun-sen suggests a downward trend like this, what you see here. And then we have a Senkou Span A and B. Let me move to a lower time frame, maybe to make it more clear for you. And here you can see Senkou Span A. This is a B, and this is Senkou Span A. Together, this creates a Kumo or cloud, as you see here. The cloud indicates supporting resistance levels forwarded into the future, and the cloud's color change can signal a potential trend reversal. We'll see how. The area between Senkou Span A and Senkou Span B, called Kumo, the thickness and color provides insight into the market's strength and potential future direction. And of course, you can say this, let's say, green line known as the Chikou Span or the lagging line. It helps confirming trends. If Chikou Span is above the price chart, supports a bullish trend, and if below, it supports a bearish trend like here. So let's get back to our slides and discuss each component in more details. This is going to get you ready for market analysis that we are going through next week. So now that we become familiar with the overall components of Ichimoku Kinko Hyo, let's delve into the details of each element to understand their applications and advantages better. Well, let's start with Tenkan-sen. Okay, Tenkan-sen known as a short-term change line we discussed. Okay, Tenkan-sen equals the highest price in 9 periods plus lowest price in 9 periods divided by 2. Tenkan-sen helps, yeah, helps analysts identify short-term trends. It's particularly useful for spotting market turning points and determining near-term support and resistance levels. Unlike the simple moving average, which relies on the closing price alone, Tenkan-sen uses the range of high and low prices, and this makes Tenkan-sen more responsive to market volatility and better at pinpointing support and resistance levels. That's why when you have Ichimoku Kinko Hyo on your chart, it's not really necessary to use simple or exponential moving averages. It's better to keep it really simple and as it is. Okay, so here is the point. When the price crosses Tenkan-sen, uh, excuse me, when the price crosses Tenkan-sen, it can indicate a trend shift due to its shorter calculation period. Tenkan-sen react quickly. Okay, uh, when the price is above Tenkan-sen, it indicates a strong upward trend and the strength of buyers. This is usually considered a strong buy signal. Continued movement above Tenkan-sen may suggest a continuation of the upward trend. And we have a situation that price is below Tenkan-sen. When the price is below Tenkan-sen, it indicates a downward trend and the strength of sellers. And this is usually considered a strong sell signal. And again, continued movements below Tenkan-sen may suggest the continuation of the downward trend. If the price when the price crosses Tenkan-sen from below to above, it signals a potential upward trend change and the start of a new bullish movement. In that case, you can wait for a one market pullback to the broken Tenkan-sen or cross Tenkan-sen, and then after completing the completion of the pullback, that would be an entry to buy the market. And this is usually considered a buy signal. By the way, we gonna confirm this signal by checking other Ichimoku components and that can add more credibility to this analysis. And another, let's say, just vice versa situation is when price crossing Tenkan-sen from above to below. When the price crosses Tenkan-sen from above to below, it signals a potential downward trend changes and the start of a new bearish move. So this is usually considered the sell signal. Many analysts are onward. Tenkan-sen can be used as a pivot line for daily trading as well. This line can show whether the market has experienced significant changes throughout the day, which can be highly beneficial for setting daily trading strategies. By thoroughly understanding Tenkan-sen as how to use it as a pivot line, let's say the daily pivot line, you can leverage this powerful tool to enhance the accuracy and efficiency of your trading decisions. Now let's go through the Kijun-sen. Continuing an exploration of Ichimoku components, let's now focus on Kijun-sen. This line plays a critical role in technical analysis. And you see, I have bolded the Tenkan-sen, the Kijun-sen here. There's a blue line. As we defined it as a baseline, which is a mid-term moving average calculated as the average of the highest high and the lowest low over the past 26 period of time. And it's really helpful to assist in identifying mid-term trends and recognizing market equilibrium points. Let's get through the advantages. Okay, so it indicates a strong upward trend when the price is above Kijun-sen, and when the price is above Kijun-sen, it indicates a strong upward trend, the strength of buyers, and this is usually considered a strong buy signal. And when the price is below Kijun-sen, it indicates a downward trend and the strength of sellers. This is usually considered a strong sell signal. And very similar to Tenkan-sen, we take it very serious with this crossing between price and Kijun-sen. When the price crosses Kijun-sen from below to above, a signal of the potential upward trend changes. Like what you can see here on the screenshot I put here. Yes, you see when the price usually crosses above the Kijun-sen, and before that we can see the Tenkan-sen is crossing above the Kijun-sen. It's the first warning signal, and this is the confirming signal, and then you see a pullback here shaping, let's say, a bullish reversal candlestick pattern. Yep, something like a hammer or something. And above the high of the hammer, we cross also above the Tenkan-sen, and that's a very strong buy signal for us. Okay, so this is how we can read the market, use this line. So you really need to practice it on different charts to see if you are how good you are at finding and interpreting these crossovers. So the other situation is when prices cross Kijun-sen from above to below. When the price crosses Kijun-sen from above to below, it signals a potential downward trend. This is what you can see as happens here. Yeah, and it's accompanied by crossing between the Tenkan-sen and Kijun-sen as well, which can, as we mentioned, add to let's say credibility of our signal here. One interesting aspect of Kijun-sen is that uh, it can be used as a key level for setting stop loss orders. Professional traders often use Kijun-sen as a crucial support or resistance level to adjust their stop loss in case of a trend change. And this helps manage risk more effectively and protect profits. And the way it works is to put the stop loss below the Tenkan-sen, below the Kijun-sen in a strong upward trend, and above the Kijun-sen in a strong downward trend. But you need always put it in a distance as a buffer from the Kijun-sen, below or above it. Okay, so far, we have familiarized ourselves with Tenkan-sen and Kijun-sen, learning how to use them in short-term and mid-term analysis. Now, let's move on to another crucial component of Ichimoku we call Senkou Span A. And we want to get through the relationship between the price and Senkou Span A. Before that, to remind you the definition, we defined it as the first leading line, which is the average of Tenkan-sen and Kijun-sen plotted 26 period into the future or forwarded. Okay, and one of the remarkable features of Senkou Span A is its forward projection. So it collaborates with Senkou Span B to create what we call Kumo, or Ichimoku cloud. And this ability to forecast future supporting resistance levels as a resistance of a key zone, let's say, is one of Ichimoku's unique and powerful characteristics. Now let's get through the relationship between the price and Senkou Span. Okay, when we have the price above Senkou Span, it indicates an upward trend, and when we have price below Senkou Span, it indicates a downward trend. And you see, I bolded again Senkou Span here. So you see during the uptrend, we expect the price to move above the Senkou Span A, and during the downtrend, or when we see the shift in the market momentum or market sentiment, we have this cross below the Senkou Span A. So here are some advantages of Senkou Span A. One of the key advantages of Senkou Span A is its ability to allow analysts to see future support and resistance levels at a glance. And this capability to predict market movements enables us to plan our trades more effectively and avoid sudden market changes. How it works, or for example, when you see the prices in a very, let's say, far distance from the Senkou Span A, means we are going to lose momentum very soon. You can consider it as something like a 100 moving averages, something like that. And then also when you see the Senkou Span has a positive slope, and the other uh, let's say moving averages like the Tenkan-sen and Kijun-sen has the um, opposite slope, means for example, here it has the positive slope, but the other two have the negative slope. It means the market is changing sentiment first. Yep, and losing its current momentum. And when the price crosses below the Senkou Span A, it means the market is gaining new momentum in the opposite direction. That would be a good way or to confirm a new bearish signal when we see this crosses from above to below. And at the same time, we see the price crosses Tenkan-sen and Kijun-sen as well, and also the Tenkan-sen crosses Kijun-sen, and both of them crossing uh, Senkou Span A. So this is a very, and we have this a strong bearish Marabuzu candlestick here, closed below all the lines, all the support lines that we have. Uh, we know from Ichimoku Kinko Hyo, and this is a very great sell signal for all of us. Okay, so a lesser known, by the way, aspect of Senkou Span A is that it can be used as a dynamic line for setting take profit levels again. So after Kijun-sen, we have Senkou Span A that we can use it to set a take profit or stop loss levels. Professional traders often use this line as a reference for determining optimal exit points in trades, especially when the market is in a strong trend. Because after a strong trend, we always expect the price is back to its average level, and then when the price just hits the Kumo, somehow it means the market is losing the current momentum. And you can get it by more practice, maybe. Now, that's we've learned about Senkou Span A. Let's move on to another vital component of Ichimoku. We call it Senkou Span B. And this line is crucial in helping us identify future support and resistance level, especially combined with the Senkou Span A that we discussed. So to remind you for the definition, Senkou Span B, known as the second leading line, is the average of the highest high and the lowest low over the past 52 periods plotted 26 periods into the future. Okay, so the formula is very simple. It's the highest price in 52 periods plus lowest price in 52 periods divided by 2, shifted forward by 26 periods. And this is the important part that can give us the, let's say, predictivity value of the Senkou Span B. Okay. Speaking of the application, Senkou Span B works together with Senkou Span A to form Ichimoku cloud. And you see I bolded it here in my chart. And this is a red line. This is an orange-red color, something like that, as I showed you earlier. And you see how we can define the one border or boundary of the Kumo using this Senkou Span B, known as a leading span B. Okay, before we get through the, let's say, interpretation of the relationship between the Senkou Span B and the price, let me highlight this. Due to its longer calculation period that we used for this second leading line, 50 periods, compared to Senkou Span A, Senkou Span B is generally its strongest and most stable support or resistance line in Ichimoku Kinko Hyo system. Okay, so it serves as a powerful indicator for determining key levels in the market. And it's really important to know that if you want to rank the support and resistance level, you have to keep in mind that the Senkou Span B is the most powerful and reliable one. And then we have a Kijun-sen, and when we have a Tenkan-sen, we have the average of both of them, which is a Senkou Span A. And the Chikou Span, which is the current price shifted back 26 periods, this is the least support or resistance level that we're going to count on. Okay, so let's move forward. after this very, very important tip, you can use it, and you can really, let's say, uh, use this ranking system of Ichimoku Kinko Hyo resistance and support levels to define the market momentum and to identify and measure the market momentum, and also the potential of trend reversal. Okay, so now let's get through the relationship between Senkou Span B and the price. The first one that I stated here many times, just erase it and no problem. When the price is above Senkou Span B, okay, please pay attention to this. It indicates a strong upward trend, and this situation is usually considered a strong buy signal. In this scenario, Senkou Span B acts as a support level, the most powerful support level ever in the Ichimoku Kinko Hyo system, helping us identify suitable entry points. And if you just think of it as a one layer or the boundary of the Kumo, which means we usually expect the price to move above the Senkou Span being uptrends. Okay, so when we have a crossing below the Senkou Span B, which means we are not going to buy the market unless we get another, let's say, um, sign or confirmation that can validate a change in the momentum. Okay, so the price below the Senkou Span B is our next discussion. When the price is below Senkou Span B, it indicates a downward trend. So we look only for sell signals. And this situation is usually considered a strong sell signal as well, especially if we have a pullback or rebound to this level or any of those other less important resistance level that we discussed, like the Kijun-sen or Tenkan-sen. And we consider that rebound as a good uh, opportunity to enter the market in a downtrend. So we are looking for sell signals. Okay, in this scenario, Senkou Span B acts as a resistance level that helps identifying suitable exit points. Now let's discuss the relationship between Senkou Span A and Senkou Span B. You know, Senkou Span A and Senkou Span B work together to form the Ichimoku cloud or Kumo, and this relationship can provide key insights into the strength and direction of the trend. How we gonna read it? It's really simple. First, when Senkou Span A is above Senkou Span B, the Ichimoku cloud is bullish, indicating a strong upward trend, and this situation is usually considered a strong buy signal. As you can see here, we have the Senkou Span A, the almost green line above the Senkou Span B we discussed, which is a red line. So when these, and you see during this uptrend, we have the Senkou Span A above the B, which means the Kumo is considered bullish. Okay. Another situation is when Senkou Span A is below Senkou Span B, which means the Kumo ahead is almost in red instead of green, as we have here, like this, okay? When we have this situation, it means the Ichimoku cloud is bearish, indicating a strong downward trend. And this situation is usually considered a strong sell signal. The thickness of the cloud in this scenario indicates that the strength of the downward trend. The thicker the cloud, the stronger the trend. As you see at the beginning of each new trend, we have a very thin, ahead Kumo. So because we are in the beginning of a new trend, so you need to master interpretation of Kumo thickness to understand the market momentum at the time. And you usually see after a long rally in the price, we have a very thick Kumo, bullish Kumo, and then when we lose momentum, we see is getting thinner. Yeah, the Kumo is getting thinner. So it means the current market is losing its momentum. And then when we usually change the sentiment, we shift we see the shift in the market sentiment. We have the shift in the Kumo from bullish to bearish as well. And at the beginning of each uh, new trend, we expect the Kumo to be not so thick. One of the key advantages of Senkou Span B is that it shows stronger, let's say, support and resistance levels due to its longer calculation period. So keep it in mind, and this ability allows us to make better trading decisions and avoid sudden market changes. And also, you should know the Senkou Span B is a very strong indicator for identifying market turning points. Professional traders often use this line to determine market reversals and adjust their trading strategies accordingly. And now, when we combine the two Senkou Span A and Senkou Span B, we have the Kumo. And now let's move our attention to this part. It's a very unique and let's say specific component of Ichimoku Kinko Hyo that the most of the other technical tools usually don't have that, which is Kumo. The Kumo or Ichimoku cloud is the space between Senkou Span A and Senkou Span B, and this cloud enables us to quickly identify trend support and resistance levels and also the market direction, because as we explained about the bearish and bullish, let's say, cloud, we can understand that during the bullish cloud, we expect the market to be to the upside or bullish, and during the bearish cloud, we expect the market to be, you say, yes, to be bearish and to the downside. So the Kumo is one of the core components of Ichimoku, providing essential information about market conditions. Uh, let's check when we have the price above the cloud, it indicates upward, and of course, price below the cloud indicates a downward trend. So when the price moving above the cloud, we consider the cloud uh, acting as a support level, and any rebound from that, or let's say completed pullback to the cloud can be considered as a buy signal, and vice versa. We have the price below the cloud, it indicates a downward trend, so we consider the cloud acting as a resistance level, and each rebound to the cloud, if the price can make it, is it will be considered as a sell signal. And there is a situation we have. Price inside the cloud. This is something might sound new to you, yes? When the price is inside the cloud, it indicates the absence of a strong trend. This situation is usually considered an area of indecision or a consolidation zone. So in this case, professional analysts or traders should proceed with caution and wait for the price to break out of the cloud for a clearer trend direction. And now you can rank the, let's say, significance of support and resistance level of each Ichimoku Kinko Hyo components. Now, so if you see the price in the cloud, you can just measure the strength of each or the significance of each component, and then the break of each one can give you a hint to uh, the, let's say, strength of a new momentum or a new accelerating momentum in the market. Okay, so when we don't trade, when the price is in the cloud. The next thing which is important is the thickness of the cloud. The thickness of the cloud also provides important information. A thick cloud indicates a strong support or resistance zone. The thicker the cloud, the stronger the support and resistance are. Okay, and the thin cloud indicates weaker support or resistance. So when we have a strong support or resistance, we don't expect the price to breach it sharply. And when we have the thin cloud, which indicates weaker support or resistance level, a thin cloud usually suggests a higher probability of a trend change, or as I mentioned at the beginning of each new trend, we expect a thin cloud at. One of the key advantages of the Kumo is that it allows analysts to see the overall market condition and predict future support and resistance levels at a glance. So as you see, this is a projected or forward 26 periods add, so you can consider these zones as a strong market uh, uh, key levels, and you can expect the reaction to the price if the price hit these levels in the future. So by thoroughly understanding the Kumo and how to use it in your analysis, you can leverage this powerful tool to enhance the accuracy and efficiency of your trading decisions. Okay, so you need to practice this, guys. Of course, you need to practice this to find all of these components and to interpret the relationship between the price and each one with each other. So far, we have explored various components of Ichimoku, including Tenkan-sen, Kijun-sen, Senkou Span A, Senkou Span B, and the Ichimoku Cloud. Now, let's delve into the final component of this system, which is called Chikou Span. Chikou Span is a crucial element as well of the Ichimoku that helps help us mm, to better understand trend confirmations and trading signals. So as a definition, we mentioned in Chikou Span, known as the lagging line, represents the current closing price plotted 26 periods back on the chart. And the formula is very simple. Chikou Span equals current closing price shifted back 26 periods. It can help us better understand trend confirmations and trading signals. And this line acts as a lagging indicator, providing valuable information about the strength and stability of a trend. It's usually overlooked by many analysts, but it plays crucial role in the in confirming trading signals in the whole system of Ichimoku Kinko Hyo. So let's take a closer look at the relationship between Chikou Span and the price. That can provide valuable insights for us. Uh, when Chikou Span is above past prices, it indicates a strong upward trend. This situation is usually considered a buy signal. For example, we don't have such a thing here, but yeah, see. For example, here in my slide, when you see the price is getting above the Tenkan-sen and Kijun-sen crossing above or both of them, you see the Chikou Span also crosses above the past price, which means the current price here, for example, at the time, is higher than the 26 candlestick in the past. So which means the market is gaining positive momentum to the upside. And we have a situation when Chikou Span hovering below past prices. When Chikou Span is below past prices, it indicates a strong downward trend. And this situation is usually considered a sell signal. For example, you see here after this long bearish Marubozu candle, you have the Chikou Span crossing below the past prices. And this is a sign, this is a very strong sign of gaining the bearish momentum or negative momentum in the market. And the crossover, of course, is very important. When Chikou Span crosses past prices, it can indicate a trend change. So if Chikou Span crosses the price from below to above, as we saw, it's usually considered a buy signal. And if it crosses from above to below, it's considered a sell signal. And this crossing can indicate market turning points, helping us to determine the right time to enter or exit a trade. And if you we use them and accompany by the other components, that's gonna give us a very, very powerful insights about the current market momentum and market sentiment. One of the key advantages of Chikou Span, by the way, uh, is that it allows us to gain more confirmation for trading signals by observing the position of Chikou Span relative to past prices. We can't just compare the price with its moving averages like Tenkan-sen, Kijun-sen, Chikou Span B. We also can compare the current price level with the past prices. So that's a really, really powerful and quick insights about the market movement and shift in the shift in the market sentiment. And it's worth to mention, a lesser known aspect of Chikou Span is its use as a strong indicator for time analysis. Professional analysts and traders use Chikou Span to examine significant time points and determine key moments for market entry and exits. So if you understand Chikou Span very well and you learn how to use it in your analysis, you can leverage this powerful tool to enhance the accuracy and efficiency of your trading decisions, because it gives you another aspect of the market analysis and another dimension of the market that you can incorporate it into your analysis. So you will be able to measure the market momentum, which is our final core point of all types of technical analysis to gauge the market momentum and the price direction. So that's it. I guess I've get to the end of my presentation today. Yeah. But by the way, in our if you have any question or inquiry regarding this condition, let me know. Okay, we have some questions. What if the market price is below the up Kumo? Okay, it depends. It's a very, very good question. If you have the prices below the uh, upper edge of the Kumo, it depends. If the let's say Kumo ahead is bearish, so this is a very bearish signal. So we expect the market to be below the Kumo ahead, and of course the up Kumo during the bearish, let's say, movements. But if the because in that case, uh, by up Kumo, what do you mean by up Kumo? Because if you mean the Senkou Span A, Senkou Span A, if Senkou Span A is above Senkou Span B, it means the Kumo is bullish. So in that case, we expect the price being above the both lines and above the Kumo. But if the price stocks in the Kumo, this is the indecision situation. Let me show you on the on my MetaTrader. Okay, for example, here. Okay, for example, here you mean the up Kumo, which is the Senkou Span A during the bullish Kumo, and it can be Senkou Span B during the bearish Kumo, as you see here. Yep. Based on that, up Kumo is always, yeah, the bullish Kumo. Okay. So if you have the price below the up Kumo or the bullish Kumo, you're talking about the contrarian trading strategies, which comes, which tries to give us the entry point at the end of the current price, the current market trend. Yes. So in that case, if we have the price below the up Kumo, it means the market is bearish and we have no signal of going bullish or going to long or buy the market. Okay, this is one thing. And of course, when we have the Kumo above, bearish. And during the strong market's momentum, we expect to see all the lines pointing one direction. What does it mean? You look at this candlestick here on the 30-minute time frame, the Euro CHF, and you see this is a bullish one, taking the price above the Kumo. Okay, but when you look ahead, you see the Kumo has Senkou Span B above the Senkou Span A, which uh, illustrates a bearish Kumo, okay, which is kind of opposite what we expect right now from the price, which has a very long, clear bullish candle, okay. And then when you look at the other components of the price, you can see, let me zoom in a bit to make it more clear for all of us. Yeah, here you can see we have a Tenkan-sen and Kijun-sen both below the Kumo, and this is another sign that usually weakens the strength of our bullish signal. Okay, and if you leave it to us, next week we're gonna interpret and use these components to uh, analyze the market correctly, and we're gonna rank all of these signals to see which one is the strongest and which one is the weakest one. And another question we have is, does the price being between the Tenkan-sen and Kijun-sen indicate a sideways market condition? It depends. It's a very good question. It depends. If it comes in line with the Kumo, it has a one kind of interpretation, and it comes in the opposite of the condition of the Kumo. We need to actually interpret it in the other way. What does it mean? It means, for example, here during a very strong trendy market, we expect the price to be in the same situation regarding the Tenkan-sen and Kijun-sen. That's clear, okay? So, for example, in a bearish market or in this downtrend, we expect the price to be below the Tenkan-sen and Tenkan-sen being below the Kijun-sen. That's it. But when the price is getting stuck between them, it means the market is losing this bearish momentum. Why? Because we have the ahead Kumo bearish. Yep, you see, while the price is moving between Tenkan-sen and Kijun-sen, and in that case, we are not gonna buy the market. We are not gonna buy the market as we see we are in a downtrend clearly, and we have to wait for more confirmation to get a buy signal. And just crossing above the Kijun-sen is not a signal. And of course, being a stock between the Tenkan-sen and Kijun-sen for the price after this downtrend is kind of a sideways market, or the market which is losing momentum. But it's really important to see that this upward movement here that uh, has got the price between these two moving averages, it's not confirmed by the Kumo. So this is another uh, let's say this is another sign that we are not going to confirm the market reversal here. So we interpret it as the market consolidation, or let's indecision phase. And when the price is between the Tenkan-sen, Kijun-sen in the Kumo, of course this is a very strongest uh, indecision point. But in our next session, you will learn how we can get buy or sell signals in this type of situation. In that case, we need to wait for the price to cross below or above all components, and then we need to see that all components are confirming the price, uh, the accelerating, new accelerating momentum. That here is we have the price crossing the Kumo and Tenkan-sen and Kijun-sen all together, and we see the Tenkan-sen just falling below the Kijun-sen, and both of these averages are below, are getting below the Kumo, and the Kumo ahead is getting bearish, and this is a very, very beautiful sell signal for us. And this is a one just let's say advanced interpretation and market analysis using that. Okay, so I have a comment from uh, our friends, very nice, because when price is above Tenkan-sen is upward market, and price below the Kijun-sen indicates sell. So when the price is in between means no, not buy, not sell. Of course, yes, that's a very, very good understanding of you. Yes, that's right, you're correct. And I hope I could answer and address your question. Any other question, guys? Very well. And thank you so much for staying with me during this webinar. I hope you enjoyed and learned something from that that can that could add to your knowledge about the Ichimoku Kinko Hyo system. In our next webinar, we're gonna walk through the market analysis now using Ichimoku Kinko Hyo. Now you know everything about the components, so it's a good time to dive deeper into the details and analyze the market using this powerful tool. Uh, we have a question, another question that's a very good one. In the next class, can explain about wave theory, price theory, and time theory in Ichimoku. Yeah, we try to cover the price theory and time theory. I'm not sure if we have enough time to cover wave theory, but we're gonna touch it in a bit detail. And thank you so much for staying with us. I wish you have a great evening, and I hope to see you next week. Thank you. Bye.